My next guest has a deeper perspective on the subject. Christoph Amberger, executive publisher of Taipan, a monthly publication focused on geopolitical issues, is here to offer insights on what's really going on with the numbers. Christoph, welcome.
Well, thanks for having me again.
Christoph, back in February, the Bush administration expected the deficit to ring in around $423 billion. Why such a difference from what it is now?
Well, I think there are three factors. One, as you said, is the Reagan paradox that if you lower taxes, you typically end up with higher tax receipts. And in that regard, of course, the strategy of the Bush administration has played out nicely. Number two, if you say you're spending a lot of money and you don't spend all of it, you're always better off. And number three, if you sandbag and you say you're going to spend $460 million, $1 billion of borrowed money in a particular fiscal year, it looks really good if you only spend $250 billion.
Right. So in a way, this is sort of a little ploy, you could say, where they kind of expect it to be lower.
Well, I would suspect that they did indeed expect that, but I'm not so sure about the ploy thing. In fact, this last week was another one of those weeks where I thought the Bush administration was completely asleep at the wheel, or had outsourced their PR and media work either to India or to Nancy Pelosi and Barbara Streisand.
Why do you say that?
Well, let's look at the numbers. We have heard a lot about this being another record deficit, and if you look at the real numbers, $250 billion in new debt are certainly a big chunk of money that has been borrowed. But the US GDP has also grown more than that. In fact, if we're looking at the new debt for 2006 as a percentage of GDP, we arrive at about a 1.9% of GDP, which is represented by this new debt. Now, put this in perspective. 2 years ago, the Bush administration ran up about a 3.6% deficit. Look abroad, we have Germany just barely squeaking under 3% this year after hitting over 3% of GDP new debt for years on end. Japan has been running deficits of 5 to 7% for decades. China is running huge deficits, 4 to 5% every year, probably even this year. The US 40-year average of new debt to GDP is about 2.3%. So the Bush administration not only was able to almost have new debt within 2 years, but it also is way under the historical average. This is certainly good news, and it certainly may irk people who have been blaming the twin deficits for everything from a low dollar to an outbreak of feline incontinence in Duluth.
Let me ask you this. In historical terms, how does this budget deficit compare to prior years?
Well, it is, from absolute numbers, it is still in the high ranges, $250 billion at $250 billion. As I said, compared to historical averages, we are certainly on the right way, and 1.9% of GDP, that is certainly a number I personally can live with as an investor.
Now, reports suggest that spending has also increased, and I think the number was $185 billion. Where is the government spending the money?
Well, the government is spending on the military, on entitlement programs, on wherever the money is being needed, it is thrown at. And that is really where I see the big shortcoming of the current administration is in the curbing of further federal spending. You can argue that, of course, being involved in the war on terror and in the occupation of Iraq is a big money pit, but there's still plenty of pork barrel spending that could be eliminated. What worries me about these numbers is that, of course, they do not include the money that was taken out of the Social Security surplus, which is, I believe, between $120 and $130 billion that do not show up as new borrowing in last year's tally. And this is the other big shortcoming I see here, the looming age bomb, which is with the obligations in Social Security, in Medicare spending, that we are avoiding right now and spending the money today.
Absolutely, because as everyone knows, we have a huge number of baby boomers, 76 million, that are going to soon be retiring. So this could play into them in an important way, correct?
Certainly. I mean, let's be serious. Every government in the world is doing the same as the Bush administration. The concept of Al Gore's lockbox is, just a fantasy product. Nobody has ever set aside money in the system for the next generation to be paid out in pensions and so on. It is a cash flow spending item. It is really an additional tax. And here, that is really the bad news for us as citizens and residents of America and as investors, is if you are counting on the government to afford you a comfortable retirement based on your Social Security receipts that you're expecting for your retirement, here's bad news for you. You're on your own, buddy. You need to be in a position where you do not count on Social Security spending. This money has been spent in the past year. Unless there is a large demographic of young, productive Americans and American immigrants, if they are legal or illegal, the baby boom generation will be hit up very hard for a comfortable retirement. So what does that mean for you as an investor? Don't count on Social Security. Do consider it an additional tax or a nice surprise if you actually manage to retire at 65 or 70. Take care of your own retirement. There's nobody you can blame but yourself. The numbers are out there every year. The money is being spent every year. Unless you yourself take care of your retirement by investing, by managing your money properly, you only have yourself to blame.
Now, let's move from retirement. Let me bring you back to today. The Dow went to 11,900, and last week, again, it had a great record setting. Do you think this is a time for investors to be cautious, or do you see good times ahead? And then let me ask you this as well. Where do you see the Dow ending up by the end of the year?
Well, let me take a year back. I remember an editorial meeting with the entire Taipan Group staff where I predicted the Dow would go, which was end of last year, where I predicted the Dow would go over 11,000. And I was scoffed at, especially from the ladies and gentlemen from the Wave Strength Group. Now that we're closer to 12,000 than we're to 10,000, I'm actually more optimistic than Todd Schoenberg is. I believe we will see probably 12,000 within the next 4 weeks.
That's
and
pretty.
We will probably power toward 13,000 early next year. There are moments in time between now and then that we will see drawbacks in the index. I think, however, that the main trend is bullish for American blue chips. And I believe that the budget deficit, the 1.9 of GDP budget deficit, is also bullish for U.S. stocks. It is bullish for the dollar. If the dollar value against other currency increases, the dollar-denominated assets, like U.S. stocks, become more attractive to foreign investors who will start again to pour their financial investments into our markets.
Well, I, for one, hope that you're right. I'd love to see a Dow at 13,000, and I think a lot of investors would too. So I think it's a bold prediction, but when we're going to watch to see if it comes true. So I thank you for your input, Christoph.
Thanks.
You might call today's show As the World Turns. From North Korea test-firing nuclear weapons to the Congressional Office lowering the budget deficit. But our guest today helped you navigate these rough waters with their recommendations. And of course, remember to check out the Commodities and Traders video that Todd recommended. If you'd like more detailed information on all of these topics, let me encourage you to visit taipanfinancialnews.com. You'll not only find information on today's guest, but on all of these situations as well. Until next week, here's to great profits from smart investing.